TJ the Wheel Deal coming at you live with a portfolio recap. Made a few moves today, nothing crazy. This is something that I'm going to do 2 or 3 times a week, especially if it's bloody like it is today. So essentially go over the moves that I made, why I made them, what's the thought process moving forward, etc. All the gimmies and the gotchas. That way I don't constantly have to do screenshots, that you guys can tune into these. And these are going to be, I don't have FaceTimes between 3 and 4. So these are going to be quick lives, 15, 20, 30 minutes tops, because I usually like to do some stretching, quick workout during this time. And it's my dead time, right? It's my me time. But I'm going to start sacrificing 15, 30 minutes a day, 3, 4 times a week, however I see fit, based on how many moves I'm making. If there's no moves that I'm making, then it won't be necessary to go live. But this will make it easier for me. This will make it easier for me as opposed to screenshotting and shit. And then Alex can get the information that he needs from here for like the clips and stuff like that. So anyway, let's get into it. It's not going to be a lot of live Q&A on here. I'll just try to cover it as we go. Appreciate each of you guys. And we'll go from there. So let's do present. I think this is going to show up. Yeah, it should show up. Let me, I'm waiting on the TV over there. Okay, awesome. So we ended up with a no bueno, $1.4 million to the no bueno across the board, right? At 8 accounts. So it was not a good day in general. But now we're going to get like inside the numbers, because that's the scoreboard. All right, that's the scoreboard. But now let's go over down in distance, to use a football analogy, because we got, championship weekend coming up 2 weeks after that, the Super Bowl. So if you understand football, you understand what I'm talking about. Like, it's not just about the scoreboard, it's about down and distance. Where's the momentum? What kind of adjustments are we going to make, etc. So the things that I look at is buying power usage. 42% on the top. This is on top right. Got 43%, 61%, 60%, 64%, 52%, 55, 52, 57, 99. So it's a little bit higher than I prefer. It's a little bit higher than I prefer across the board. And we're only going to focus on 2 accounts right now. The first account is my son's account. We're sitting on the 8,500 shares. Didn't make any moves. I am playing for a bounce. I'm playing for a bounce here, and I am going to sell covered calls. I want to get more value on the covered call premiums, and then I want to just shelf that money. So I want to sell the covered calls. I want to bring in, $5,000 in premiums. That's the goal. I want to bring in $5,000 in premiums. It could legitimately happen if BMU just bounces to like 525 to 550. And then I'm going to sell covered calls, and it's probably going to be a very aggressive covered calls, probably $7. If it were to gap up to like $6, then I'll sell the covered calls at $8. I'll bring them more premiums, and I'll also qualify for more capital appreciation. And that's just the way that I'm playing it. If it were to tank to like $4, then I'm going to go find money. I'm going to go find $4,000. I'm going to pump it into the account, and I'm going to go buy another 1,000 shares, because ultimately I like to get to 10,000 shares. The easiest way to get to 10,000 shares is to sell covered calls, take those premiums, and buy more shares. But I want to get more money for the premiums, right? So the only way that I'm going to be able to do that, guys, it's real simple. The only way that I'm going to be able to do that is BMNU is going to have to bounce. And in order for BMNU to bounce, BMNR is going to have to bounce. And in order for BMNR to bounce, Ethereum is going to have to bounce. In order for Ethereum to bounce, Bitcoin is probably going to have to bounce. In order for Bitcoin to probably have to bounce, the entire market's going to have to bounce. So what are we saying? We need a green day. It's like a cascading effect. We need a green day. So that's how I'm playing that one. Now let's look at the big account. We made some moves. We made some moves here on the big account. Right before the bell, I opted to sell 500 more calls on PayPal. Why? Because we're getting a lot of pressure over here on the puts on paper. It's still $5.11 above our strike price. So in actuality, that's not that big of a deal. But the issue is there's a lot of capital tied up here, $929,000. And there's not a whole lot going on in our favor. So I'm like, I'm here to manufacture the win. I already had 1,500 calls, short calls, naked calls on PayPal that basically said, hey, Mr. Market, I don't think PayPal is going to be over $65 in 17 days. And I'm willing to be on the hook for 200,000 shares of PayPal at 65. I'd have to deliver 200,000 shares of PayPal at $65 in 17 days. And Mr. Market's like, okay, you want to take that gamble? I don't recommend it, but if you want to do it, here's 110 grand. There's the rope. Go hang yourself. That's essentially the gamble, the bet that I'm making with Mr. Market. Why? Because if these calls get challenged, guess what's no longer being challenged? The puts down the road. So that's what I call the rich man's covered call, not the poor man's covered call. It's poor man covered call. You got to pump out money by the leaps. I don't want to do that. I am a premium collector. I'm a premium seller. So I'm like, well, I'll sell the leaps and then I'll sell some shorter dated covered calls, naked calls along the way. That is the way I like to play the game. This is my favorite trade. My favorite trade is to sell the leaps and then sell some short dated calls along the way. If the opportunity really presents itself, sell some short strangles along the way. Because then now I got three possible ways to make money: the put premium from the backstop trade, the put premium from the short puts, and the call premium from the short call. So that would be three ways to make money. I haven't initiated that one just yet. So right now we're only running, the two legs, if you will. So we've got the 2,500 puts at 50. So this is an agreement to buy 250,000 shares of PayPal at $50 down the road, right? 11 months from now. And I'd feel pretty damn good about PayPal at $50. I'd feel a lot better at 40. So this is a trade that I am willing to babysit for the next couple, 2 or 3 years, guys. That's just where I'm at with PayPal. And this is going pretty damn picture perfect. I know it probably doesn't look like that to you guys, but this is where I understand down in distance a little bit more than you guys. I'm like, because this one doesn't worry me. It's out of the money. It's whatever. I'm here to pick up theta. I'm here to collect theta. A couple of months down the road, same price action. I look up, that position's even. But what's real is this premium that's being collected and will be captured on the call side. Now, if PayPal starts shooting up, I can always make adjustments to those calls, roll them out and up in time, knowing damn well at that point that there is no pressure on the puts. So those are going to start printing. So I try to create situations like this. Heads I win, tails you lose. It's almost like you're creating a double-sided coin, if you will. And it's just, you just got to flip the coin. It doesn't matter. You're going to figure out how to win. So that's what's going on with that. Feel really good about it, guys. I give this trade a 97.5% chance of having success by the time we get to the expiration date. So that's my absolute favorite trade on the books. It isn't causing any stress. And now that I added more calls, it's pretty damn exciting to ring the cash register for over $100,000 in 24 days at an 11 delta. It's pretty ridiculous. What else did I do? I added more shares on BMNU. And let me see if I can actually show that trade over here. If I go to the order chain, you're going to see that trade right here. I think it's 500 right here at 259. At 259, right when the bell is closing. 500 contracts, 65 strike, 17 days from now, I got paid $34 a contract. So it was pretty good. It was pretty good. What else did I do? What else did I do? BMU. I think I screwed all this up here. Here we go. Yeah, I'm going to go to the other side because I just feel like it's just easier for everyone to see. So let me go to this side here real quick for you guys. Bear with me. I'm going to try to knock these out quick because, like I said, this is normally like literally I go to the other room and get on the massage chair and stuff. Or I get on the little vibration plate. Or I go do a little bit of a workout in the garage. So let me get on my days to expiration. Let me line this up. Okay, here we go. Yeah, this is just way easier on the eyes. So there's PayPal. I feel good about it. Enphase. Didn't do anything with Enphase, just monitoring the naked calls there. And I'm like, that's pretty cool. That's pretty cool. Making 19 grand in 23 days if this one works out. And check and I want y'all to really understand what's going on here because this is another rich man covered call scenario where I sell the leap and then I'm selling shorter dated calls along the way. I ain't closing these naked calls early. I'm in it to win it, man. I'm in it. It's a campaign because I don't mind rolling and rolling and rolling until I get to that 332-day cycle. So I'm like, okay, cool. I'm happy with the $11,000, but there's still $8,500 that belongs to me there. And if it gets challenged, fantastic. What can't be getting challenged mathematically at that point? The $25 puts. You guys should understand how I'm running the hamburger stand now. And that's what I like about the way that I sell puts and calls. Is if anything happens to me, my wife reaches out to you guys. Some of y'all should be able to guide her in what the hell I was trying to do because I'm very methodical and mechanical with the way that I approach this game. PayPal, we've already talked about it, right? The puts can't be getting challenged while the calls are getting challenged. It's this or that, guys. It's mutually exclusive. BMNU, I sold I bought an additional 25,000 shares to lower the average. And now we're sitting on 150,000 shares at 561, and we aren't selling any calls yet. We are in a position to wait for Sunny and 75 because there's no pressure on the portfolio. There's simply no pressure on the portfolio. I know that 1.1 to the no bueno doesn't feel good, but it didn't really create anything. It didn't really create any pressure. So I'm like, I could wait it out because if I wait it out, nice green day, a couple, 2 or 3 green days, that, it could be an extra $50,000, $100,000 in premiums collectively between all the other positions. So I was like, I don't really have to be in a hurry to sell the calls here. That extra cash flow isn't really going to move the needle right now. So I'm going to wait for Sunny and 75. There's other places where I can make money. SoFi, didn't do anything with SoFi. We've got the $23 puts. I feel good about those. We got the $36 calls. So we got a little bit of a strangle here, 2-to-1 ratio on the calls versus the puts. And there's, 53, there's like $58,000 in premiums hanging in the balance there. I feel really, really good about it. And then we got also a backstop trade here. So this one is the way that ultimately all of the positions will be set up. You run the backstop trade, and then you're doing short dated strangles along the way. And you got 3 possible ways that you can make money there. And there's not 3 possible ways that you can lose money because you can't be losing money on the puts and the calls in the same time. It's just mathematically that shit doesn't check out. It doesn't work. That math doesn't math. So these things aren't as risky as people think. It's just whether or not you can manage the trade, you can manage the bankroll. And then the hardest thing is whether or not you can manage your emotions. Because there's some people that are just going to look at that number at negative 1.143 and you're fucked. You're mentally screwed. You're not going to be able to deal with it. I'm over here always in the weeds looking at the down and distance and seeing, okay, how bad is it really? And I start dissecting everything. And when I start dissecting everything, and I'm like, okay, well, this thing just comes down to a couple plays and we'll get to it. SoFi, we've covered that one. Feel great about that one. Nvidia, what's there to talk about? It's got a cap out between 160 and 230, and there's $43,000 of meat on the bone. Right now, it's not going well collectively because we're down 13,000 on the trade. But I'm like, it's very comfortable. It's very, very comfortable still, though. It's comfortably above 160 and it's comfortably below 230. So this is just a theta play. It's theta collection. It ain't much right now, but it's something. It's $1,400 at theta coming off the books. I'm like, okay, in 15 days or so, if this thing still camps out in this area, this trade's going to go from negative to positive. What else did I do? I added 100 more contracts to Riot today. I was like, I like this trade. I think the deal is a lot better than the markets than people are giving credit to Riot. I just think bottom line is the market, the sentiment's shitty on Riot. There's a lot of investors that don't believe in Jason Les and management. They feel like they've been slow to deliver the goods. So Riot's sentiment isn't really that high, and that presents opportunities for us to continue to build out positions because I believe in management. I believe in their mission. I think that they're going to make it happen. So I was like, hey, I like to make a little bit more money. So what did I do? I sold more puts. I sold more puts right before the market closed, kind of at 237. At 237, I got $66 a contract on 100 more puts. So I was like, well, let's add to it. Let's add to it. Right now, it's down a little bit, very little on it. And I was like, I feel really, really good about it. I'm like, I don't mind bringing in, $23,000 in 40 days, call it, right? 42 days. That sounds pretty damn good to me to pick a strike price that I feel pretty confident in, comfortable in. I'm like, if I needed to own Riot at $15, I wouldn't be that disappointed in that. I would not be that disappointed in that. Palantir didn't do anything here. This is 59 days away on the strangle. And again, this is starting to look like the way I want the positions all like the way that the SoFi position is, the way now that this Palantir position is playing out. Is I want to have a huge ass backstop trade on. I don't have that yet on Palantir. I'm working towards it. And then I want to run short dated strangles. So that's what I'm calling the rich man's call, the rich man's, naked call, if you will, because it's not covered call. So I want, and eventually this will probably be 2,000 contracts eventually. But I'm hoping to get better value than the $3. I want to get, 325, 350, that way the juice is worth the squeeze. And then you pick a strike that you're like, I shouldn't even have to monitor this thing. I shouldn't even have to monitor it. That's what I'm looking to do. I'm looking to pick those strike prices. So I'm like a year and a half down the road, a little over a year and a half, whatever. It's about a year and a half down the road. You're telling me that Palantir is going to have a 60% CAGR this year. And you're telling me that you're not going to be able to justify a $50 price on Palantir? I don't believe you. Here's my money. Here's my money. I don't believe you. I'm going to put my money where my mouth is. And apparently the people on the other side are willing to put their money where their mouth is. And that's how you have a trade. So I'm like, I already got $60,000 for this particular trade. I would like to do it to the point to where I got like $500,000 writing on it in extrinsic value and notional value of like 10 to $15 million. Right now, we're at a notional value of $1 million on those puts. And then we've already seen this strangle here. I think this strangle is just picture perfect. There's, damn near $500,000 hanging in the balance here. And all Palantir has to do is cruise between 140 and 240 for the next 59 days. And yes, we're going to deal with earnings. If earnings are amazing, I still don't think that these 240s will get challenged. If the earnings are not so amazing, I do see a world where the 140s could get challenged, and that's okay. I won't look to roll out right away. The first thing that I would do if the earnings like really disappointed and this shit tanked like 20%, I would look immediately to roll these 240s down to 200 to get a little bit more delta neutral. And the good news for us is if it goes down, is there's more kids on the other seesaw. There's more contracts on the calls versus the puts. Not quite a 2-to-1, but like a 1.5-to-1. And that is going to pay dividends down the road because I could get quite a bit of money for rolling down. I could get quite a bit of money for rolling down. If I wanted to roll down right now from 240 to 200, It's $466,000, guys. That's crazy. Why is that important? Because those credits would go a long way towards financing these debits of rolling the 140s down. So essentially, you just start with these goalposts like this. This is a goalpost trade. And if you have to make an adjustment, you just make that adjustment. Whatever it is. If you need to adjust a put, you adjust a put. You need to adjust a call, you adjust a call. I like to adjust the uncontested side because then I'm locking in wins. I don't want to adjust the contested side because then now I'm like rolling negative equity, right? It's like when you're trading in a car, you're rolling in negative equity. I don't want to do that. So as long as it's out of the money, as long as it stays above 140, I'm not going to mess with the put. I'm not going to do it. But if it starts getting really close to the 140s, to the point to where the 240s are no longer helping me, then at that point, you know, I should theoretically be up about 50 or 60% on that side of the trade. I'm going to lock in that part of the win, and then I'm going to roll down from 240 to 220 or to 200, and we'll go from there. But y'all also saw that if I roll down, the algorithm's telling me we don't really like that. So we're going to take some of your buying power away because they still, you know, there might be positive call skew or something. This is where you got to really dissect the options chain, and you got to look at where this is something I did with on a call yesterday. And I don't know that I'll be able to see it here because I don't have my open interest. You're gonna have to bear with me. I'm gonna have to go to the other side real quick. This is a nice little teaching segment for you guys real quick. So you go to this Palantir trade, and this is something that I use when I pick my strikes. So we're going to go to the trade table here, and we're going to go to this particular trade on the short strangle. And you see where the share price is at 170, this little dot right here in the middle. But now I want you to see the distance, right? It's only 30 points away where the puts are, and that's a 19 delta. So now you're going to go find your 19 delta on the call side, and you're going to see that it's at 210. So it's farther away. So that tells you that there's positive call skew on this particular trade. Is you just go to the distance away from the strike price, and if the delta is higher, like you just go 30 points, for instance. So 140 versus 200, that would be equidistant, equal distance away from your strike price. And you're going to see that the deltas aren't going to match up. So the one that has the higher delta, that's where the skew is. So if you look here, 30 points away is a 19 delta. That's where the 700 contracts are on the puts. So now we're going to go 30 points away, which would put it at 200. And you look at your delta, it's 27. So that's Mr. Market telling you there's a lot more people that are buying calls than are buying puts. So they're bullish on Palantir's price action. That is why when I put these calls on, I put them further out of the money. That's why I did that. A, B, this was also comfortably on top of the 52-week high, which is about $207, $208. So that's all the reasoning behind the trades and why they look the way they look. And why do I got 1,100 contracts versus 700? Good question. Glad you asked. Is because I'm trying to create some delta neutrality. So the only way to get to delta neutral is to what? Have a 19 delta versus a 19 delta. That's delta neutral. So what would that mean here is I would just need 700 contracts, and I would roll from 240 to 210 because that's going to be a 20 delta versus a 19 delta. That's pretty damn delta neutral. But that trade's not comfortable for me. Why? Because that 210 isn't that far away from the all-time high, from the 52-week high, which is about $207, $208 a share. I don't like that. Why? Because I'm expecting some knock it out of the park freaking earnings for Palantir. So why am I going to put myself in harm's way like that? If they knock it out of the park and they get to like 220, it gets uncomfortable, but it's still comfortably out of the money. And then they just really, really knock it out. The tariffs, everything works out. Greenland, people stop acting like idiots in Minnesota on both sides of the aisle. Things start calming down. Then I can consider raising my 140 to 150, 160 and creating delta neutrality that way. So anyway, I'm giving you guys a lot of good stuff here. I hope y'all can appreciate it. Strategy. Nothing going on here with strategy. It just sucked today because it's down 13 points, and you have 700 puts down the road. 5 months from now at 170, that's produces a big portion of the drawdown that you see there. About 30% of the drawdown that you see there is just strategy having a really, really bad day. Unfortunately, I don't have any calls on because I didn't play those well last week. Cost me like $50,000-$60,000, right? That's jockey error. That is wheeler error. That's operator error, user error. That's human error. Nothing to do with the stock. I just didn't play it optimally. It is what it is. You got to hold yourself accountable. Didn't do anything on Apple. Didn't do anything on Google. We're just collecting theta here, guys. We're very comfortable here. We're comfortably above 220. We're comfortably below 340. We're comfortably above 220, and we're very comfortably below 500. So we're chilling. We're chilling. BM&R didn't do anything. Drawdown. Why? Because BM&R sucked today, right? It went with the rest of the market. It came down almost $3. And we got 100,000 shares. It stands to reason that you're going to be down $300,000. That's how the math works, man. And then here we just, bought the calls a while back. And this is, I feel like I haven't done a trade this bad in a long time. This is definitely going down as one of my worst trades. Buying leaps when the mojo is absolutely raging is like that. Buying the timely leap, that wasn't a timely leap. You know what I'm saying? You just got to call a spade. And then ASST, pretty substantial drawdown. Why? Because it's down quite a bit. 6 cents is a lot on a 90-cent stock. And I got 250,000 shares. So that's the portfolio snapshot in a nutshell. So on the DGen account, on my son's account, we're just staying pat. If it dips down to $4, I'll find $4,000. I'll shoot them over to Tasty Trade. I'll buy 1,000 shares, maybe 1,500 shares, and chill out. We're going to play for a bounce, and then we're going to sell cover calls. And we know no matter what, we have to sell cover calls above $6 because our average cost is $6.13. The good news is that we already made a little bit of money on a cover call campaign once. So that's what's going on in a nutshell. I got to run because that's my wife calling, but that gives you guys the portfolio recap. TJ the Wheel Deal signing off. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.